Hi again, Ed the Finance Guy. How are you today? Appreciate you tuning in. I hope you enjoyed my last video about gambling losses. And I want to keep this video in the same line. Tax season, right around the corner, July 15th. Trying to give you some additional tips. When you file your return, you could save some money. If you like this video, hit the like button, share, subscribe. Any suggestions, put it on the bottom or email me at ed1959@usa.com. I want to talk today about college costs and how you could write it off and get a nice deduction. So if you have a child that's in college or you're in college, you could use a deduction where you could save $4,000 in taxes and you would get a 1098-T from the college, and it would tell you when you registered, how much you spent, what your scholarships were. You're able to put that on your tax return and get what's called an American Opportunity Tax Credit. Now, the difference between a credit and a deduction is a credit is money. So if you owe $2,000 in taxes and you get a $2,000 credit, it flattens you out to even. If it's a deduction, you could deduct it off of your income and pay less taxes because now your income is lower. So you always rather get a credit over any kind of a deduction because the credit is dollar for dollar. So this American Opportunity Credit is great. You could use it over a 4-year period. They ask you questions like, are you in full-time college, part-time college? It's something that you don't want to forget about. A lot of times people tell me that their son or daughter went to college. They didn't get any kind of form from the college. So you can go online usually and get that form 1098-T. It's great. It's a very, very big help. It could be a $2,000, $3,000, $4,000 deduction for people based on what the college is charging you. It also covers books. If you're dorming at the school, it covers everything. It would all be on that 1098-T that you get at the end of the year. The other expense that you have to remember is if you're in college or your child's in college and you have student loan interest. Don't forget, student loan interest is deductible. So if you're paying any kind of a student loan off, you're going to be able to put it on the front of your tax return and it'll be a deduction against your income. Not a credit, a deduction against the income. And remember, everything helps. So if you get a deduction, you get a credit. Credits are always better, but a deduction is good too. So you want to be able to make sure you take advantage of the tax system. You're not doing anything wrong. You're following the rules. But a lot of times people forget about these small items. They're trying to file a return quickly and they just don't concentrate on what forms they got in the mail because they're getting so many documents in the mail. They put it in a file. They don't remember if they got the student loan deduction, if they didn't. Very often I'll say, didn't your child go to school? Don't you pay student loans? Oh yeah. Well, how much student loan interest did you pay? Oh, I don't know. So they would have to contact their school to get it or go online to get that form. It's very important when you file your return. Have all your documents together. Make sure you have all your deductions ready to go. When you present it to your accountant, don't give it piecemeal. Put it in one envelope. Make sure it's easy to understand. Remember, he's a third party going through your personal taxes. He doesn't know your situation as well as you do. Everything's got to be together in the file. So you want to make sure you have your 1098-T, so this way you can get your college tuition deduction and your student loan interest. This way you can write that off of your income. July 15th is the deadline. I'm going to keep giving a few different tax ideas before filing your return. I appreciate everyone listening. Keep tuning in. Hit the like button, subscribe. Again, this is Ed the Finance Guy. Be smart, be safe, keep tuning in. Thanks.